Gold went to 5,000. Nothing happened. Gold goes to 10,000. Nothing happened. It's nothing's going to happen. Go to 15,000.
Yeah.
And ultimately, what will happen is you're going to rebalance and reorder global trade in a way. What does everybody say they want? Both the Chinese and the Americans. Americans want the Chinese to consume more and produce less. The Chinese want the ability to trade in their own currency. Gold going to 10,000 does both of those things. China also imported 900 odd tons of gold against that 1.2 trillion. If you valued gold, I think that worked out to $36,000 or $38,000 per ounce. China's balance of trade was even.
The global financial architecture is undergoing a massive paradigm shift as physical assets reclaim their foundational role in international commerce. Central banks are quietly shifting away from traditional fiat reserves, signaling a structural reordering of global trade networks and monetary systems. Lukegromen, a prominent macroeconomic analyst, emphasizes that gold is on an inevitable trajectory to hit $10,000 or even $15,000 per ounce. According to his analysis, this historic surge will occur without disrupting daily market operations, serving instead to completely rebalance trade mechanics between the United States and China. Eastern economies are currently accumulating record amounts of physical bullion against their massive trade surpluses to systematically bypass Western financial frameworks. This dramatic revaluation will ultimately satisfy the core objectives of both nations, granting China currency independence while balancing global production. Such structural shifts will secure international trade against localized economic collapses. Now, we present the clips from Gromen's interview. Before we continue to discuss this, please hit the like button, subscribe to the channel, and ring the bell icon. Thank you, and enjoy the video.
I've been a proponent of this theory or possibility of a revaluation of gold over some short period of time. I still think it's a possibility. I think it's less of a possibility now, or it would be more needed to be done in a crisis that I don't see necessarily happening at this point. But I think it's more being driven by trade essentially at this point, where we can see the gold flows of they're going into China. China's running this massive trade surplus. This is something I've been talking about with in our newsletters of many economists in the West will complain the Chinese are mercantilist and running this $1.2 trillion trade surplus. It's the biggest on record in the history of the world as a percent of sort of manufacturing GDP. True. And yet, if you look at that trade surplus of 1.2 trillion in 2025 versus 990 billion in 2024, which was also a record, the trade surplus of China rose from 990 billion to 1.2 trillion, despite the fact that the yuan rose meaningfully against the dollar in that year. China also imported 900 odd tons of gold against that 1.2 trillion. If you valued gold, I think that worked out to $36,000 or $38,000 per ounce. China's balance of trade was even. This has all been seen before. This is the UK, and China went through this in the 1760s, where the Chinese said, sure, we'll send you silk, we'll send you tea, we'll take some of your ceramics, those are sort of interesting, but you don't make anything else we want. We'll take bullion though. Send us bullion. Silver bullion. Wasn't so much gold then, but the problem, of course, was the Chinese were going to clean London out of silver bullion, and so trade was ultimately balanced over opiates and century of humiliation, blah, blah, blah. It's repeating. History's repeating in this way, where the Chinese are running massive trade surpluses. And a big part of it is like, you guys don't make anything we want. We like some of your Boeing aircraft, some of your engines, a little bit here and there. But other than that, they are just waving in gold and silver. You can see what the Chinese are doing. You can see what they've been doing. You can see what central banks are doing. You can see the price rising. I mean, if you and I were sitting down doing this interview even 4 or 5 years ago, you can go ask any of your contacts in gold 4 or 5 years ago. If I would have gone to you and said, gold's at 5,500, what's going on outside? They would be, oh, there's zombies walking the street, economic collapse. And that's been part of it too, where gold went to 5,500 and the sun came up and the lights came on and the market still worked. And the beauty of gold, there's a lot of things that are beautiful about it, but the beauty of gold is it's not used for anything. It's ironic. The very thing that most people detract from gold, it's not used for anything, are why it's so useful as a monetary asset, as a reserve asset. Because look, gold could go to $1 million, and what's going to get hurt? Now, take corn. Take corn to $1,000 a bushel as a reserve asset. What's going to happen? 6 billion people are going to starve. Take oil to $1,000 a barrel. to make it the reserve asset to back the dollar like we did in the 70s, right? What's going to happen? The world economy collapses at 150 as rates surge and what have you. So gold can go up and up and up, and it's not hardly used for anything. And so that's why I think whether you look at, when I talked about the trends we're seeing, gold to oil ratio has gone from 13 to 60. Gold to treasuries surging. Stock prices down in gold 30% since 2022. You can see over and over and over. So gold went to 5,000, nothing happened. Gold goes to 10,000, nothing happened. Nothing's going to happen. Go to 15,000. And ultimately, what will happen is you're going to rebalance and reorder global trade in a way. What does everybody say they want? Both the Chinese and the Americans. Americans want the Chinese to consume more and produce less. The Chinese want the ability to trade in their own currency. Gold going to 10,000 does both of those things. Russia or China or both went through some sort of political crisis, catastrophe, overthrow. So if I woke up and Putin had been overthrown by Boris Yeltsin too, where he's somebody who's willing to sell off Russian interests on the cheap to Western interests and re-dollarize the whole thing. I'm going to be wrong. I'll be saying I'm looking to sell gold here. Same thing as if she was overthrown by some sort of very pro-Western interest who was willing to move back to sort of where China was in the late 90s, early 2000s, where they really stifled their own domestic interests and cater to the U.S., then I'm going to be wrong, where they start restockpiling treasuries, etc. I'm going to be wrong. That's what it would take in terms of either of those two things. U.S. austerity, probably the third, but I don't think we have to worry about that anytime soon.
Economic history is repeating itself as global superpowers actively construct alternatives to the modern dollar-centric framework. The core issue lies in Triffin's dilemma, which forces a reserve currency issuer to continuously offshore its industrial base. To bypass this structural vulnerability, a dual system strategy has emerged that separates the medium of exchange from the store of value. International transactions occur in local currencies like the yuan, while excess surpluses are immediately converted into physical bullion. Consequently, the price of gold is predicted to climb continuously over the long term, structurally enhancing the purchasing power of nations holding physical reserves relative to Western manufacturing bases. This modern iteration of trade settlement mirrors historical periods where physical assets were transferred directly to balance deep deficits, ensuring financial sovereignty remains fully intact even during intense geopolitical friction. Now, let's get back to the interview.
China needs to be able to buy commodities in its own currency. Not all of them, but just on the margin, to have that flexibility, that optionality to do so allows them to manage the yuan without having to sell FX reserves or without having to slow their economy. They can adjust the rate of dollar outflow by switching over to buying in yuan and net settling in gold. China has set up over the last 15 years this infrastructure to do exactly that. If you look at around the world, they have offshore yuan clearing banks in every major gold hub in the world. They have an offshore yuan clearing bank in London. They have one in Switzerland. They have one in Dubai. They have one in Singapore. They have one in Hong Kong. They have one in Shanghai, of course. And that is, to me, they do not want the yuan to be what the dollar has been at all. Because what the dollar has been since 71 requires you to offshore your industrial base, to offshore your productive capacity. And the Chinese have zero interest in doing that. And so, but they also...
That, by the way, is Triffin's dilemma.
That's exactly right.
Yeah.
That's exactly right. And the way they cut the Gordian knot of Triffin's dilemma is you separate the medium of exchange from the store of value, which is exactly what they're doing, which is to say, hey, pay in yuan. You end up with yuan, Mr. Saudi Arabia, Mr. Russia. You end up with excess yuan in some period of time because we have bought more oil, etc., from you than you have bought from us. First, feel free to come in and buy high-quality Huawei equipment, BYD cars, solar, all the things that China does. Use those yuan there. Those yuan will always be money good for things we make. But if there's still stuff, if you still have yuan left over after buying all that stuff, buy gold. And unlike the dollar system since 1970, where Secretary of the Treasury Connolly said the dollar's our problem, but it's our currency, but it's your problem. The Chinese are treating gold as a reserve asset. The yuan is our currency and it's our problem. In other words, if you buy gold, you exchange your yuan for physical gold. You take your gold home. The Chinese print a bunch of money for some sort of internal stimulus, whatever. They're happy to let the price of gold rise because the price of gold rising increases the wealth of their citizenry because they own a lot of gold. It helps recapitalize banks because their banks own a lot of gold. It certainly helps them on the FX reserve side and because they own a lot of gold. And so what they are communicating with this system to their creditors is if you have yuan surpluses, change them into gold. And then the price of gold is going to go up in yuan over time, which means the purchasing power of your gold in terms of our goods is going to rise over time. You're going to get wealthier relative to our production base just by trading with us in yuan, exchanging it for gold. Whereas on the American side, for 50 years, it's been, hey, hold our treasuries. And especially, as you noted, since 2008, oops, we need to print a bunch of money to bail ourselves out. Sorry, we're going to screw your purchasing power of those treasuries relative to oil and food and critical inputs, etc., goods that China makes that you need. I am very, very confident that they have no interest in replicating the dollar system of the last 50 years. If
Would ego make them want to do that?
No, because I think they're realists. I mean, whatever one thinks about China, they're very pragmatic. They want to do things that work. Are they the greenest country in the world? No. Do they care? Are they there holding the banner for green and environmental?
Greener than they were.
No, they were. And geopolitically, we just see the advantage of all of the investment they've made in the green stuff, which is it works. And when the Americans show up and do something that cuts off 20% of the world's oil supply, we went into that crisis thinking that China was the weakest. If you asked, 10 American strategist investors, who's the most screwed by Hormuz shutting down of any of the major economies? And the answer was China and Europe. And that was 120 days ago. Today, you ask those same 10 people, they're going to go, China was able to take pain greater, arguably at least as well as the Americans, but certainly better than the Europeans. They were able to take down oil imports, 4 to 5 million barrels a day. Doesn't mean China can last forever with that being closed, but it's all at that point a pain contest. And the Chinese, by virtue of this electric shift, this was not some dogmatic environmental thing. This was cold, hard geopolitical reality of we make this stuff, we control the supply chain of it, and we give ourselves optionality by doing this. And that's the same dynamic I think they're applying to the de-dollarization in gold, which is nobody trusts yuan, everybody trusts gold.
Yeah.
And so gold is simply the vessel that gives them the ability to buy more in needed commodities in their own currency as a way of giving themselves this optionality to make sure that they can't be choked out by the dollar system. For me, I think the transactional use, I agree with you, in the day-to-day role. I think where we are and increasingly where we're going is at the supranational level or the intranational level, international level, that shipment of gold from Iran to Russia. I think there's an element of where that's going to, at that level, that will happen more, partly because trust is eroding, but partly because it'll be, it's probably politically incorrect, but as my grandfather used to say, it's a system I refer to as no tiki, no washi. Right, we're close to the same age. You can't pick up your clothes at the dry cleaner unless you've got your plane ticket. And back in either the 50s or 60s, the United States used to send a plane load of gold to Riyadh every month, every quarter, to settle oil deficits. And I think some version of that is how gold, it may have already begun being used in that way, but essentially every quarter, perhaps every month, you'll tally them up and you'll load it up, and for certain goods. Like over 6 of the last 8 months, the number one export of the United States of America has been gold.
A profound divergence is expanding between paper financial assets and tangible commodities, completely rewriting the rules of global macroeconomic strategy. Traditional Western financial models continuously fail to realize that gold possesses unique utility as a monetary anchor precisely because it lacks industrial consumption constraints. Unlike vital energy and agricultural resources such as oil or corn, which cause immediate economic collapse or mass starvation if their prices spike, bullion can appreciate infinitely with entirely positive systemic outcomes for central banks. In fact, Underlying market metrics reveal that global stock prices denominated in gold have already plummeted by 30% since 2022, while the gold-to-oil ratio has surged dramatically from 13 to 60. Looking forward, the prediction stands that gold prices will continue an aggressive upward trajectory, eventually acting as a supranational settlement mechanism where sovereign nations clear monthly trade imbalances via direct physical bullion transfers. The era of unbacked sovereign debt acting as the ultimate reserve asset is rapidly drawing to a close, replaced by a multipolar system rooted in real wealth. Navigating this transition requires a fundamental reassessment of global risk. Share your thoughts about this interview in the comment section below. If you found this video helpful, please hit the like button, subscribe to the channel, and ring the bell icon. Thanks for watching.